All right, welcome back everyone to NYU Grad's daily podcast on stocks and finance. It is Tuesday, January 9th, after market close, and we have a few things to talk about today. Let me not further delay and jump right into the breadth numbers. So for Tuesday, January 9th, we had 200 new highs and 178 new lows. If you follow the podcast and Substack, you'll notice that this is in line with the last few sessions. It's been predominantly a little bit overweight on the new highs versus new lows, but it hasn't been too lopsided, so to speak. We had 28% advancing versus 67% of shares declining. That's 2 days in a row now where the declining was 65 to 70% of shares. And we have 23% of shares below its 50-day moving average and 34% below the 200-day moving average. The complexion of the day was not panicky, but it felt a little light, and that was evident in the volume of the SPY index. I think around like noon during the lunch break, I was checking on the volume of SPY, and it was like at 28 million shares traded. We closed the day for SPY having traded a total of 65,790 shares. So a little bit of a recovery into the close, but the average volume is 81 million. So definitely below average. It just felt like everyone is waiting on bated breath for the CPI numbers that come out on Thursday, and potentially this spot Bitcoin ETF approval that everyone is expecting this week, hopefully for them, because I don't really trade crypto. Everyone is expecting this to be approved on Wednesday of this week. And kind of funny to me, probably not funny to folks who trade crypto, after the U.S. Session closed, right around 4:42 p.m., the SEC had made a tweet, and I'll share a screenshot of this. I'm going to read it verbatim. Quote, "The SEC Gov X account was compromised and an unauthorized post was posted. The SEC has not approved the listing and trading of spot Bitcoin exchange-traded products." That was at 4:42 p.m. Eastern Time. I just think it's just so ironic that the SEC, the governing body that's supposed to go after fraud, was victim of a fraud, tweeting that the Wall Street cabal that's about to take over crypto away from the how would you say democratization of currency back into the walls of Wall Street and the government. So it's just, the whole thing is just very ironic to me, right? Like the SEC, the folks that people that trade and invest in Bitcoin partially want to get away from, is dictating the future of the Bitcoin ETF. Very ironic. But one of the reasons why I really don't trade crypto, well, there's a few, and I'm going to go on a tangent here. Hopefully I won't go too long. So without going into too much detail, when I went to Stern NYU in the mid-90s, I interned at Goldman, and I also interned at Merrill Lynch. Merrill Lynch, if you've never heard of it, they were a brokerage firm. Wow, I'm getting old, huh? There are people that are in this world that don't know what Merrill Lynch is. Um, and I just saw a lot of scrupulous activity. And one of the things that I knew early on was Wall Street is a sales machine. Um, and when my mentor Bill Cara says all stocks are sold, that is basically what that means, right? Like whether you bought Apple, the stock, or Bitcoin, or Ethereum, it was, unless you're Satoshi, you didn't invent that idea in your head. I'm going to invent, Bitcoin and and move forward. Like either you read about it or you heard about it through a friend, you saw articles about it, you saw the price go up, and eventually you sold yourself on it, but other factors sold you on that, right? So if you look at the macro of Wall Street, the whole thing is set up to sell. It's to sell, 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 pitch, pitch, pitch. The Bloomberg terminal, the news flow, the CNBC, all of it. The guy named Kramer. It's just all a 24/7 pitch machine. And when I see folks in media, and I'll be specific, like Michael Saylor or Kathy Wood, on stage last year at the Bitcoin conference saying, they're closing their big keynote, and Michael Saylor stands up and says, "I'm gonna leave you with one thing: you never sell your Bitcoin," and everyone's clapping. And then Kathy Woods goes on CNBC is saying by 2030 we should see 1 million per coin. Like when I start hearing these things, I've been through this already. I've been through this whole snake oil sales pitch. And it's one thing, like if in the beginnings of Bitcoin, when it was fringe, when it was, I should say under the radar, sure, I think that had a better chance than now. Because what's going to happen is once this ETF is approved, the spot Bitcoin ETFs, one or a few are approved, you're going to see options. You're going to see inverse Bitcoin ETFs, 1x, 2x, 3x spot Bitcoin, inverse 1x, 2x, 3x. And then you're going to see a tremendous news flow on this. Just crypto, Bitcoin, all the time. Because they're going to make a shitload of money on it. That's the only reason Wall Street and the SEC is getting involved in this, to approve it. And that's the truth. So I will post this keynote from last year. You could watch the whole thing or just the last few minutes where Michael Saylor makes this edict that you never sell your Bitcoin, but under his breath, you can almost hear it through his soul. You never sell Bitcoin until I sell first. So yeah, I think we're going to hear about Bitcoin 24/7 very soon. So what else stuck out? So I've highlighted extreme networks in the past. This was on the way up. And then I also noted when things were starting to get red alert, breaking down, but it broke down hard today. It's down 8% on news of lower Q2 revenue guidance. Another thing that stuck out to me was the volume up down, which is breadth, of the NYSE. Although we opened low, very hard low on the markets, and we fought back all day, breadth and this volume of NYSE was down or downward pressure all day. And at the end of the day, it just kind of tanked, meaning that a lot of sellers came into the close. I'll post screenshots of all of this. So that tells me that bounce today on Tuesday could potentially be a big fake out, and it wouldn't surprise me if tomorrow we open down big with all this hoopla about spot Bitcoin ETF. Obviously, if the spot Bitcoin ETF gets approved somehow miraculously tonight before the market open on Wednesday, then it's going to be all chaos, and animal spirits will come back into the markets, and I think you'll see a pop in Bitcoin, a pop in risk assets, a pop in Coinbase, ARK, all of it. 10-year Treasury yields is at a critical juncture. It has bounced off of falling to 3.78%, and now it is above. It's very sticky above 4% right now, and the fate of risk assets lies in the balance. Whether we are going to hold the support here at 4 and start rallying to like 4.3 to 4.5%, or is this bounce in the 10-year done and we are going to go south to below 3.7%. What was strong today? So keep in mind, Kura Sushi was up big, then down big, and now they're up today 6.5%. Uranium was up 4.8%. DoorDash was up 4.2%. TZA, which is the short or bearish ETF of the Russell, was up 3.13% today. Shopify was up 2.97%. DRV, which is a bearish housing ETF, up 2.75%. There were several Tesla shorts that were ETFs that were up 2.5%. Uber was up 2%. Oil was up. UCO via UCO was up 2.1%. DraftKings was up 2%. What was weak? I mentioned Extreme Networks already, but Coinbase was down 4.9%. The UVXY, which is the volatility bullish ETF, was down 3.5%. You had Las Vegas Sands down 3.5%. Crocs down 3.2%, but Crocs was up like 20% yesterday, so maybe just taking a breather. Affirm Holdings was down 3%. Red Rock Casinos down 2.8%. VinFast Autos down 2.8%. So you get a sense, like Tesla was down 2.4%. And Roku was down 2.44%. And looking at this week list, a few of these are in ARKK, or ARK Innovation Funds. You have Coinbase down 4.9%. You have Tesla down 2.47%, and Roku down 2.44%. So I'm watching ARK very closely, as you know, if you're following me on Substack Notes. I think ARK is yet to be seen if it's going to backtest and fly higher or backtest and fail. I'm starting to put positions. I'm putting my trade down and betting one way or another. What to watch? You have very important CPI numbers on Thursday, then the PPI numbers on Friday. Keep watching Magnificent 7. Keep watching yields and this Bitcoin ETF fiasco. Everyone is expecting approval this week. With that, I will see you all after the Wednesday session. All right, I'll talk to you later. Bye.